In this tutorial video of the extreme breakouts and price action strategy, we're going to go over the market regimes. And market regimes are what allow you to define quantifiably bull markets, bear markets, and sideways ranging markets. And before we go into this, I do have this to show you. It's also on our tutorial area for this, where you can read it over and look at it. But just know that these settings are what will give you the type of markets that we just talked about. So if you're looking for bear volatile markets, you're going to use the market regime of less than negative 0.6. If you're looking for bear quiet, you're going to look for it between these settings. If you're looking for a neutral or sideways market, you're looking between these settings. And your bull markets, either quiet or extremely volatile and bullish, they're both bullish, but this is more volatile at the higher end. You find it between these settings. So those will actually go into these market regime filter areas. So if you actually wanted to use a market regime, you would click on use market regime. And then what this is here is how far it is actually looking back. So let me show this to you visually. Let me actually add something like that to the screen. We'll use, here's a good one, for example. Okay. So we'll set this also to 100 setting. And you can see this visually now. Okay. So say we have our breakouts, which we're looking for breakouts that are breaking out the last 60 bars, as an example. And let's say we want to look for very bullish conditions. So going back to this over here, maybe I want to look for something between 0 and 1, for example. Let's just see what that looks like. So here I have market regime filter, use it. My market regime max is going to be a max number of 1. That's the highest it can go. The lowest we want it to go is 0. I'm not going to filter out anything in between right now, but if I wanted to say only do 0 to 0.3 and then between 0.3 and 0.5, there's nothing. It's filtering all that. And then again, if looking between 0.5 and 1, I can use this to do that. So let's see what happens. I'm going to use market regime filter, looking for these type of conditions. And you'll see down here that it actually became more profitable. It took less trades, became more profitable, became higher profit factor, higher percentage profitable, and my drawdown went down just by looking for those type of conditions. Let's try between 0.75 and 1.47. And let's just see what happens. So we'll put this as our minimum. And we're going to do 1.47 as our max. Okay, there you go on that. We're going to go to a really high number, take more bull trades. Sometimes it can affect your profit in different ways you don't expect. So you want to try different settings on here. So if I go 0 to 1, if I was to filter out maybe something in between 0.2 to 0.5. So you can kind of get a feel for how this works and how you could use it looking for different conditions. Now, if I was looking for bear markets, let's say I had a short system and looking for bear markets, I may want to have maybe 0 as my max and maybe like a -2 is my minimum to look for those conditions right here. But there's no one size fits all. You just definitely got to try different settings and see what works for you. So right now, let me just put this back to here. So what this is doing, just so you can see it visually, on this market, this is a market regime example down here. And you can see over here the number that it is. So since we're only looking for conditions between 0 and 1, and to also be breaking out above 60 bars, you can see here when it entered is right there, 0.98, and then it entered. Over here, it was 0.28. So you can see how that's working. When it's within that market regime, that's the only time it can enter if we have that use market regime selected. These market regime moving average crosses filters. Let me explain what that is real quick. So if I was to, I'm going to show you this visually. Let's say I apply some moving averages to this. I'm going to add 2 moving averages, 1 and 2. I'm going to move this to the back. And we're going to make these a little more visible. So we're going to make a 1 length. It's going to be our fast moving average. Make that a little thicker so you can see it. And our other one, so since I have a period here of 100 on the market regime, let me put that in there. If we're going to use a moving average and we want to be responsive, it's good to use a moving average of about half. So I make this a 50 for the slow. Okay, so now anytime the fast is moving over the slow, that is a moving average cross for the market regime. So that's going to, what that does is when the market regime is moving up, that moving average crossover will keep us in that rising market regime. And then when the moving average crossover, when the fast goes underneath the slow, it keeps us in a declining market regime. So this is good for shorts when it's declining, and when it's rising, you definitely want to be in longs. So to show you, that's just showing you what's working visually behind the scenes here. So in the code is doing this all behind the scenes, but when we go here and we select use market regime moving average across, I would put in the fast 1 and the slow 50. And now what's happening is you can see here, for example, we had an entry only when it's between 0 and 1, and it's also in this rising market regime within this moving average crossover. That's the only way it can enter. So you can see, again, that happened over here. So that keeps us on the right side of the market regime. That's what these market regime moving average crosses does. You can try different numbers down here. This is, you just had to experiment with different settings to see what works for what you're trading and the length you're trading, but very, very flexible. That's how market regimes work. You have 2 of them. This is just a copy of the first one. What you can do with this bottom one is maybe make it a longer time period. So this one, if we had it on 100 or if we had it on 20 or whatever setting you have this on, maybe make this one a longer one. So you have 2 market regime filters that are looking at the markets from a short time frame and a long time frame, and you can get really precise with your entries like that in your bull, bear, and sideways markets. So that's it for the market regimes. Just study this over, and you can see what the different types of markets are, how they're quantified, and then you can input some of those numbers here to test your strategies. And just know that market regime filters will filter on any trade you take with any setting up here. It could be breakouts, it could be your volume controls, your price action. It works with all of them. So the market regime is just a filter for any other settings you have here for your entries. So that's it for the market regimes. Very, very powerful tool to use to define what type of market environment you're trading in. Necessary to make profitable and low-risk trading systems. Definitely get used to it and use it. Study the sheet. And if you have any questions, always just an email away. Thank you very much. Enjoy. Take care.